Hello, Maverick traders. Welcome to our currency recap. Joe with you here. It's the 15th of May, which means it's got to be a Thursday. You guys know how this works. I'm going to talk about the meaningful news of the day. Let's break down these markets technically, and if I've got trades to share, you know I'll do it.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, you're going to see it almost appeared like a risk on day. We've seen risk on and risk off. This is more of a risk off a day. However, something didn't participate. Let's jump straight into the news. So the U.S. markets finished mixed, and the NASDAQ ended slightly lower, but we've seen over the last, it's only been a couple of days that this surge that we've seen in the equities here, at least on the U.S. side, is starting to kind of plateau or run out of steam, which is totally normal, and it's actually put itself in a pretty good place. We've actually exceeded or regained the majority of losses since the beginning of the year. We're above some moving averages and some key points technically when it comes to getting out of some bear territory. However, we knew it was going to kind of consolidate and move sideways. So you'd imagine once that steam rolls off, that you would see the risk on things start to drop a little bit and more of a flight or a move back to risk off. The U.S. economic data was showing some signs of slowing in both the CPI and the PPI, a drop in both, along with a slight increase in retail sales. We also had the unemployment number come out, or I should say the unemployment claims come out, and it was actually in line with expectations. So we are seeing a slowdown in the inflation gauge. We are seeing a little bit of an ease in that. However, the consumer's pretty active, and it looks like as far as claims go, employment is still pretty stable. I imagine that puts the Fed in a weird place to where, do we cut rates? Can we cut them now? Well, some signs say yes, others say not yet. Now, what did that do? Well, let's take a look. So the yen had a nice bounce. Remember, we had a really good risk-on scenario over the last, I'd say, week or so. But the dollar just didn't participate today. It just said, you know what? Hey, all our data is ours, and it just kind of stayed flat, slightly lower on the session. The franc bounced, euro's flat, the pound stayed pretty consistent. In fact, it's the most consistent out there I've seen in a while. The Canadian dollar absolutely flat, and then the Aussie and the Kiwi, since a little move to a risk off, I imagine they dropped, which they did. Now, if you take a look at what we did SPX-wise, just 0.41%, still a gain, but a little bit more of a flattening. If you guys take a look at the chart, we'll see it here in a minute. World index as well. Crypto had a slight drop. Look at the move in gold. The move up in gold, 1.79. That's another flight to safety there. And then oil, with all its stuff going on, continued a little bit lower today. Cryptos did push back. I'm starting to see that cryptos are more of a risk on kind of a trade here, and they dropped it back as they usually do in their fun way. We'll look at those charts as well. So overall, folks, I mean, when it comes to the U.S. equities, it really didn't change much. We did get a cross on that 20 and the 50. I'm still going to keep the slopes off because that 20 needs to turn around, but it was such a strong move so quickly. It's great. I mean, we're still +2. I'm still definitely on the bull side. What it did is it put us up into this area of strength. And what I mean by that is we're above this resistance point that was so watched for a while. We talked so much about this 55, but as it started to turn and set these higher lows, it created something more of a, maybe we should sit back and pause. Now, could this be one gigantic massive bounce? Yeah, it could. But whatever got it up here doesn't matter. It's the sustainability past that. And when I see this gap that we had over the last little bit, and this is one of the first, hey, we got to deal with, some of these countries coming through, and China, we're talking about it. And that might just be enough to get people back into these markets. So if we can stay up at this area, it's very easy to say, hey, look, we're back up to some levels that are actually on the bull side, and we've regained, if not all, I haven't checked the numbers, but we're very close to regaining the majority of the losses from the beginning of the year. So it's definitely glass half full, is definitely optimistic, and what I refer to on the equity side is sentiment is definitely to the bull side. And what sentiment is, folks, it's dollars. People can tell you how they feel, and people can tell you what to think, but where their money goes is undeniable, and we are definitely seeing money put into these markets. Let's take a look at the economic data. This is what I thought was pretty interesting, and boy, I would not want a Fed job, that is for sure. So here's the U.S. CPI numbers. This came out on Tuesday, and we saw a little bit of a drop. It's not like a massive drop, but it's showing a little bit of easing, a little bit of slowing, a little bit of, it's less expansion. It's going the correct way. And then we come out today. I'll just skip to the U.S. stuff here, folks. PPI follows suit with it, a little bit more of a drop when it comes to that in some of these aspects, month over month, and the core. But then you pop out with this retail sales number showing that the consumer is still active, not by a lot, but enough to tick it up. And then we have our unemployment claims, which is directly in line with expectations. So we're not seeing unemployment numbers increase. We're also not seeing retail sales slow. We're actually seeing them pop up. Now, I'm going to say it once again, folks. These are the most current term. These can change based on what this month does, which we won't know until June, right? So we're a little bit delayed here. This could be a last-ditch effort. This could be, which makes these very difficult to kind of take and to project moving forward. But they are reacted to, so keep that in mind. So let's just go ahead and jump out in the markets and take a look at our velocity scores and see what we got. So as always, folks, let's start with the yen, and it was the big gainer for the day. You can see it had a pretty good move, but it is off of a bottom. So what's tough about this is the velocity score when it comes to the risk on and the risk off currencies. I'm starting to see a lot more volatility and divergence, which makes them difficult to pair to each other. I'll show you some examples here in a minute. Overall, you can see the yen had a pretty good bounce. It started the day before, and then it just shot up today. We had a good move up here on the RSI. The moving average is kind of this U shape. I really can't do much with it. It's not weak because it's in this bounce period, so I'm just going to throw it out. Well, we got a good move to the upside here, a flip on the SARS. Yeah, so it was pretty easy for me to give it a +2, at least for today's velocity. Now, it is approaching a resistance. We've seen this resistance a little while ago, right? It's some area that it could roll back over, so just be mindful of that. There's a lot of flip-flopping going on in the currencies, especially as of late, especially with velocity. Now, the dollar hung in there. Here it is. It didn't really do much. It didn't participate. I thought it would go up or down based on some of the economic numbers and news, and it didn't. It just kind of stayed flat, thinking that, oh, geez, well, we got good retail, we got good employment, but then we also have slowdown in the CPI and the PPI, which is what the Fed wanted to see before they start to cut, but when and how much? And I think the dollar just kind of sat there. So not a lot of participation. Pretty easy for me just to leave it at a 0 there. Let's go to the franc because it had a little bit of a bounce off the bottom. I decided to bump it up to a +1. I don't like the moving average. I do like the momentum here on the RSI and the flip on the SAR. I would like to see price action consolidate a little bit where it's at. You can see this gap and then maybe push higher to the 15, the 1.5 area. Before I get a little bit more optimistic. For me, it's just an oversold bounce, kind of like the yen. Moving over to the euro. The euro, I thought would be a little stronger. It did have a little bit of a bounce, but it's more of kind of a sideways consolidation after a flat move, a really weak bounce. Now, I'm going to keep it at a 0. I liked how the momentum kind of popped up above the 50, but you can see it's floating back down. If it could find some legs here and not come back to revisit that support, I'd like to keep it at a 0, maybe bump it up to a 1. I just want to see how it participates when it comes to some of the risk on and risk off. So what I mean by that is the yen, the dollar, the Aussie, and the Kiwi. Those seems to be the biggest movers. Once again, here's the pound. Pretty stable. It does have its reaction. It's been pretty much a strong staple move for quite some time. And you'll see when you take the strongest and the weakest and you match them together, you see overextension in larger ranges. But if you put something against it like this, like the pound, you've got a nice, steady, slow-growing move to the upside that you could put some of these volatile stocks against. I do like the pound. It was easy for me to give it a +2. I can almost give it a +3 if it continues higher. Good slope here, kind of sideways on the RSI, just that the momentum looks to be slowing, but that's not a bad thing. If it stays stable, this thing can continue as long as it wants to. So it's definitely an easy +2 for me now. Take a look at the CAD. The CAD slipped a little bit. It did drop. It did slide. It's back up. The SARS flipped. I'm going to go 0 here on the RSI, kind of a negative there on the SARS. So overall, since it's down in this lower area, I'm just going to give it a -1, but a 0. It's fine. It's just really not doing much for me. Here's the Aussie. Aussie had a pretty decent pullback. Both of them did. It had a pretty good pullback. The RSI slipped below the 50, but it just, once again, when these flip-flop, when we go from risk on to risk off, I'm seeing big moves. It's not like they go a little bit. They go a whole lot, which makes it very difficult. You can get a +2 to -2, +2 to -2 between these, and so they're difficult to chart. That being said, if I could get this to flip and show a little bit more move to the upside, and I could get this above that 50, you could see this might take a while. Then it's going to go basically from where it's at in velocity wise, folks, below the 50, trending down, a flip in the SARS, price breaking support level with a SAR flip, no exponential moving average involved, or I should say moving average involved. It's still a -2. So it would take quite a bit for this thing to flip back to the other side. Let's take a look at the keyway. A little bit easier to see. It has, look at this drop. Look at the drop that this thing had when it comes to the relative strength. And it's almost a panic fall. And that happened on, a day before. But here we are on the 15th. So we're right there. So we were already sliding. It just continued. Real hard rollover. But if you take a look at the moving average, look how wide this thing is. It's almost a 0 overall. Negative on the relative strength, flip on the SAR, price action falling apart. I kept it as a -2. You could go -3 because it broke 2 support levels and it's approaching a pretty major one. But that can change tomorrow. These things flip-flop very quickly, which makes them difficult to trade. Let's get to the cryptos, which are a little easier because they are pretty much always risk on. Consolidation here on Bitcoin. A little bit of a pullback, but it's staying high. I was fine keeping Bitcoin at a 0 when it comes to velocity. These are very difficult to stay at 0 because they do move so much. Moving over to Bitcoin Cash, I decided to drop this a little bit lower. And why is because I'm seeing a little bit of a descending trend. We had a huge flush out move. I got a slightly sloping moving average. And even though the RSI is showing a little bit of hold here, it's a little bit underweighted. So I decided to give it a -2 just because it looks like it's kind of bleeding off. Now, that doesn't mean that we can't get something like this in the next few days. You guys know how this operates. But it's this overall slow bleed off trend that has pushed me a little bit more to the bear side. Let's jump over to Ethereum. Now, Ethereum, I kept it a 0. I like it, kind of a pullback here. I could actually keep this as a +1, kind of a flattening moving average. I do like how the RSI is above the 50, although it's sloping lower. I kept it kind of at a 0 because of the momentum of what I'm seeing here in the price action. But this could easily be a +1. And it is probably the strongest of the cryptos that we take a look at. That being said, let's finish up here with Litecoin. Litecoin looks to me like it's got a little bit of a bounce. We'll see what it does at its moving average here. Flip on the SAR. A RSI that is staying below that 50. So I just kept that thing at a -1 to see if it rolls over, is a -2. But if it can come back, it goes back to 0. And that's kind of what I've been seeing. These moves from risk on to risk off are super volatile. And the only thing they're actually doing is increasing the range when it comes to pairing them. So this is where I'm at for today. Not much, well, a little bit of changes kind of back and forth, but there's not a lot to put together because what was a +1, +2 is now a -1, -2, and they flip-flop so fast outside of the dollar. But the dollar is so stable and sideways, it really doesn't give us much. So let me go ahead and let's go through some possible trades. Now, I don't have any, but I want to show you a couple things that might be of interest. Okay, so first off, let's start with the strongest and the weakest. So here is the Aussie yen. And you can see that at this point, we've got the Aussie winning, and then today, the Aussie's losing. So you've got this pullback, but it is so deep, and it is flipped so many things. Look at this RSI movement. It's very difficult to say, okay, look, this is going to bounce and move higher, or is this something I want to short? We'll take a look at the support level right through here. The extension of the move to the downside, saying, okay, momentum says, well, it's fallen so much, but this overall trend is up. So it's just a big move to the upside, followed by a big move to the downside. Now, sure, if this could flip and turn and we get a risk on scenario where the yen drops and the Aussie goes higher, then maybe we could get this. However, it doesn't last very long. And so what ends up happening is you have this overextension. Now, this might be a little bit too far for me to short. However, it's a little bit too weak for me to go long. So let's take a look at the yen Kiwi, which is once again the gainer versus the loser. And we run into the same situation. You've got big volatile moves. This little bit of consolidation here, a big, gap up, shoots up, and then an absolute massive correction. Huge drop in the relative strength. It's just reaction. Get out, get in, get out, get in. And it makes it very difficult to create any sort of stability. Now, understand, this is at a little bit of a support level, thinking that, well, if we can continue to see the risk off go and the Kiwi, the Kiwi continues to show some weakness, well, then we can continue to short it. However, we're well past the majority of the move. So it becomes a difficult thing to do because of the flip-flop of the ranges in the risk on, the risk off. So even though I don't have a specific trade for you, I hope it kind of opens your eyes on kind of what I'm seeing out there and taking a look at some sort of consistency in a currency against something else. A lot of flip-flopping going on, and it makes things a little bit difficult. Now, just be patient. So we got signs of stability in near-term U.S. economic data. And I'm going to say it's near-term, folks. This is stuff that might not be affected by some of the impacts of the tariffs. And if there are no impacts, it's the reaction of sentiment to the tariffs, the fear, the reaction, the movements of businesses, what traders do in anticipation of things. But the dollar, however, just stays flat. It stayed flat today. We had good news, bad news, good news, bad news. Take it for what you will, but the dollar stayed flat. Pretty interesting. Risk on and risk off frequency can create larger ranges. I just gave you an example of that. Understand, I'm seeing a lot of black and white and a lot of reaction back and forth day to day. It doesn't have to be that way, and it can create a lot of problems when it comes to trading because we want to see 2, 3, 4 days in a direction. That's where we make that's where we pyramid in, and we can make some pretty good money. So look for a stable currency. Play relative strength and weakness. Proper position sizing is all. You guys don't have to trade if you don't want to. Just be mindful of what you're doing and be responsible for it. Thanks for joining me, guys. We'll talk to you next time. Bye, everybody.